What's up, guys? Welcome back to Daily Crypto Analysis. What we're going to do tonight is talk about an extremely powerful indicator specifically for crypto. The reason this indicator is so great for crypto is because of crypto's volatility. It helps us find and identify entry and exit points better than almost any other indicator I know of. You see a lot of technical analysts in the crypto space using this indicator, and there's a reason for that, guys. A lot of people don't know what this is, but it's called the Volume Profile Visible Range Indicator. So in just a few steps, I'm going to show you guys how to apply it to your charts, go through step by step what you need to be looking at when you're using it, and how you can use it to make better trades. Like I said, even if we're entering into a longer downtrend, this indicator is going to help you guys find the right trades to make. So with that said, let's jump on in, guys. All right, guys. So first thing you want to do is come up to indicators and type in visible range. And then under volume profile, you'll select this indicator here. Okay. So this will bring up this histogram on the horizontal axis. So then, because the bars are quite large right now, these encompass price ranges. So for instance, this bar is a price range from 36.1 up to 37.7. So we want to make it significantly higher resolution than that. So we'll come to inputs and we're going to change our row size up to 2000. And you'll see now we get this appearance. So basically each bar on this histogram is representing a certain price range. Now, what this is telling us is that, so this is a volume profile that takes each price point and tells us how many transactions have occurred at basically each level. Okay, so here we're looking from April or March until today. So from March until today, this is the entire range of prices and how many transactions occurred at each price. Now, this is so powerful because of the fact that it tells us where our levels of support and resistance are. And I'm going to prove this to you guys. And I'm going to show you how even today, you could have used this to make a huge profit just today. Even in the setting while everyone else was getting wrecked, you could have made a ton of money today. So what you want to do is when you're using this indicator, you want to be on, pretty much the day or at minimum, a 4-hour scale or even longer. You could use the week scale because what you're looking at here, you want to know where are these levels of support and resistance building at. And if you're looking at super small time frames, you're not going to get an accurate picture of where the levels are at, because support and resistance isn't such it becomes less useful the shorter the time range you look. So in my opinion, the day is you can't go wrong by looking at the day long indicator, because it's going to give you a long-term picture, because you have so many people holding at these ranges, guys. So you want to know where the holders are at. Okay, guys. So what you want to do every time you see one of these charts, or every time you bring this chart up, there's two things you first need to identify. The first are known as high volume nodes. What a high volume node is, it's a point in the volume profile where there's a much higher level volume than, average. So on this chart that we're looking at right now, there's approximately, and we'll come out to this range here, we'll come out basically back to December. There's a few major high volume nodes. This is one. This is one. And then basically this whole region down here from 30,000 up to 40,000. It's, massive volume in this level. So these guys are going to act as our levels of support and resistance. And, we saw that, in the most recent run. We came and then we struggled for a while to get above this $47,000 level. Then once we got above it, this is how crypto breaks through floors, either up or down. It has to be one massive event. And that's how it happened. We got below this floor right here by a massive capitulation event where we went from, 53,000 almost all the way down to 42,000 in one night, right? So we broke through that floor and then we were not able to get back above it. So what you could have been doing here is, setting, you could have set a buy order here and then had a stop loss slightly below it. Because, if you break through this floor, then you're going to go into this region here. And this is the second region we need to look for, which is called the low volume node. So low volume nodes, being the opposite of high volume nodes, are areas where if you get into these ranges, there's not a lot of volume being traded. So these ranges here are not going to hold as support. So you're pretty much going to move through these ranges much more quickly than you will through the high volume nodes. So you see, today, for instance, when you could see we're coming down here, and then right once we got down here, once we got below this level at around 46 and, we're trending downwards, guys, you could know that this was basically, predetermined almost, because look at this range here. It's an extremely low volume node. There's just not a lot of support through these levels. It's not like the 46,000 range, which held us up, for a few weeks. So once we got below that, now $47,000 is resistance, and below it is an extremely low volume node. And because it's a low volume node, we fell right through easily, right? Now, where did we bounce off of? And this is where, you can start to use this to make money in down markets. You can either take short positions in these ranges, or you can take long positions once you reach a new high volume node, which is what we did today. We came down through a low volume node, this gap here with very little volume, very little support, and we got right into this zone here, which is a high volume node. Look at all this volume here, guys. There's tons of support in this level, right? And what did we do? As soon as we started grinding into this high volume node, we bounced right off of it. So if you were looking at this, you could have set a buy order somewhere, maybe right around in here. Very predictable that this was going to happen, that we were going to come crashing through this zone because there's no volume, crashing right down to here, which is what we did, and get a nice bounce off. I mean, you could have literally set a buy order at, 40 some $1,000 and ridden this profit. Now, that's not to say that this will necessarily hold, because especially when you're doing the short-term trades, guys, you don't want to be greedy. You don't want to try and be greedy. So, take your profits, because in crypto, you never want to go against the trend. You never want to be long-term against the trend, especially with short-term trades. So guys, those are the main points for VPVR. If you're looking at your high volume nodes, you're looking at your low volume nodes, and you identify these every time you make a trade. See where you're at, guys. See where you're at, on the histogram scale. See if you're in one of these high volume nodes, if you're at a level of resistance, or, if you're at a point where you might get a bounce off, because you might want to time your trade better. You might want to, hold off, or you might see an opportunity that you didn't see before. If you use this every time, I think you guys can really become more consistent with your trades. So, that's it for tonight, guys. If you guys like this type of content, hit the like button and subscribe. Slap that notification icon. And as usual, I really appreciate you guys. So until next time.